This one, I just want to talk about the world and the economy and economics a little bit. I want you all to ask yourself, what would happen if I went to the ATM machine and I put my card in and the machine said no money is available to be withdrawn at this machine. And then you went to the bank and the doors were locked. And you said, yeah, that's kind of strange. So you said, well, there's another bank a few miles down the street, let me try that one. You go down there, put your card in the ATM machine, same message. And then you get a phone call, and it's your sister, your brother, your neighbor, your husband, and they all say the same thing to you. You having any trouble with your ATM machine with your card, or do you have a few dollars I can borrow because I went to the ATM and I can't get any cash out and the bank is closed? What would you do in that situation? And I think this is important for everyone to think about, because I don't think many people think about it because it's just so common and ordinary in everyday life that you're able to get your money out whenever you want. But I just want you to think about that for a second. What would you do if you didn't have that much food in your house and you needed some money to go to the grocery store or to do whatever you had planned for that day and you couldn't get the money? But now I want you to think about what would happen if the next day went by and the same thing happened, and then 3 days went by and the same thing happened, but now instead of the little food that you did have in your kitchen is really basically down to things that you really don't want to eat or can't eat unless they're mixed with something else, but you're hungry. And you do have maybe some spare change, maybe a little saving envelope or drawer in your house, and you go in there and you take out your little funny money, or in case of emergency type of money, and or you don't even have that. Let's just say you have your credit card and you go to the restaurant down the street and they say, I'm sorry, we're only taking cash. We're not accepting credit cards any longer because of the problems with the banks. We don't know when we'll be able to get our cash out, so we're only taking cash. And you only have a credit card, or you only have $20, and you have a family of 4, and it's going to cost you at least $30 or $40 to eat. So you spend that $30 or $40 and you give everybody half the meal, or you have to share a meal, and the next day, same thing. And it turns out that this has happened in other countries in the world, and I know we live in America, which we all feel very safe and secure here, but the truth is, financially, if we were not a superpower, we would be bankrupt, that nobody would lend us anything, loan us anything, let us borrow anything, and I very highly doubt that anyone would even help us, even though through the decades we've helped other countries in need, just that the other countries aren't really in situations where they can help us either, because they're in such dire financial situations. And as an example of this, if you look at the national debt, it's nearly $20 trillion. Now, to put that in perspective, if we just say we had a big war in the Middle East and we took over every single country in the Middle East, from Iran, Iraq, Saudi Arabia, Syria, every single country, and took all of their wealth, we still couldn't pay off our debt. If we were taxed at 100%, meaning you work your job, you get your paycheck, and your paycheck is 000 because they took 100% of your income and used it to pay the debt, we wouldn't touch the debt. That's how much debt we're in. I mean, we're in deep doo-doo, folks. But the other thing that's scary is that interest rates are hovering right around zero, right near 0%. Now, normally when you're in debt and things aren't going well, well, there's two things they can do. One is they can print out more money, make more money available to people. So they can give the banks, a bunch more money, and then they can give it to us. But the problems with that is the money is worth a lot less. The other countries that lend us will not lend us things if our dollar gets too weak, if it gets too devalued, because the more of it that there is, the less value it has naturally. Just like if you were trading, say, Pokemon cards with a friend, not that I meant to Pokemon, but if you had, or baseball cards, and you had one Reggie Jackson card, and your friend didn't have any, and he really wanted that Reggie Jackson card, maybe he would trade you 10 other cards to get that one Reggie Jackson card. But what if he had 10 Reggie Jackson cards and you had 10 Reggie Jackson cards? He's not going to give you anything for it because he's already got 10. He doesn't need any more. Other countries won't need our money if it's not worth anything, or if there's so much of it around that it's not hard to get or not a big deal. It's just lost its value. And that's what quantitative easing is called. That's whenever they inject money into, then mainly inject it into the banks, and they end up keeping a lot of it, and we get a small percentage of it, which is terrible. It doesn't really help things, but it's one of the biggest problems going on. The other thing they can do is raise interest rates, because that way people can invest their money and they get a percentage. So how that affects people is, if you invest something that pays you interest at zero interest, where we're at now, if you put $100 in the bank and it pays 0% interest, you still have your $100, but you don't get anything extra. And people that are on fixed incomes or retired, they need to make money on that, because as their money runs out, they need it to be at least a little bit replenished. So, if they live a long life, that they will have money left, because if it's never replenished, it goes down to zero, then what are they going to do? So people like to have a higher interest rate, but the problem is if they raise interest rates, that it's going to crash our economy. As we all saw at the beginning of January, they raised the interest rates 1/4 point, and the stock market went into a downward spiral rapidly. What people don't realize is that there is a lot of inventory in stores, stores that have ordered a lot of stock in televisions and clothing and merchandise that they expected people would buy, but the problem is people aren't buying it. The stuff's not selling. Retail sales are down. The cause and effect of that is because people are not buying money at the stores are like we just saw Macy's I think they're closing 5 or 10 stores. The effect is they're not making the money to pay their bills. They either have to lay people off or they have to shut down stores, which is even worse. So that's starting to happen right now. Unemployment, even though the numbers say that it's at 4.5%, and if you compare that 4.5% to the Depression, when supposedly more people were out of work, if you use the same statistics that they use on what gauges if someone is unemployed or not, then the unemployment numbers today are actually higher than the time of the Depression, because during the time of the Depression, you were considered unemployed if you weren't working. If you were a man who was able to work, who didn't have a job, you were considered unemployed. Now you're only considered unemployed if you're on getting unemployment assistance. And we all know that that's for a limited time. So once your unemployment assistance runs out because you can't find a job and you're out of the workforce, you no longer count in the unemployment numbers. Also, if you have a part-time job, you're employed, so they don't count that as unemployed either. So statistically, they're saying that there are more people unemployed today than there were in the Great Depression. Also, the middle class numbers have shrunk. Middle class people the population that's middle class is lower than it's ever been in the history of the United States of America. So there's more people on welfare and low income and government assistance than ever before. The people that are rich are fewer than before. Of course, there's a lot of people that are millionaires, but I'm talking the really super rich. They're the ones who seem to get all the money and benefit the most from these bailouts, and they hold on to it and they don't disperse it. So that's another negative that we've got going on right now. I mean, things are heading in a bad direction. If you saw Greece, they have recently, in the last year, started taking money out of people's bank accounts. They have negative interest rates, which if they actually lower the interest rates in America one or two more times, we're going to have negative interest rates. And what does that mean? That means if you have $100 in the bank, every month that goes by, they're going to take money out of your account to keep your money in the bank. Big problem that's going to happen there is there'll be a run on the banks. People will start taking all their money out of the banks, and there's not enough physical cash that's printed for everyone in America to have their physical money in their hands. I know they say everything is FDIC insured in your bank account, but if they don't have the money, what are they going to do? I mean, all they can do is print more, which we already talked about. It's just going to lower the value, which they may end up doing. They call it QE4, which will be quantitative easing fourth time, which people are dreading that if it ever happens, because they know the dire consequences and the loss of valuation of our currency. A cause and effect of that is, you may have noticed over the last few years, the price of groceries increasing. That's all effect of quantitative easing. If they do a quantitative easing number 4, or QE4, the cost of a loaf of bread, which a few years ago I know I could find a decent loaf of bread for 99 cents, $1.59. Now, the cheapest on a lower quality bread is, $2.59, $2.99. They do QE4, you're looking at, about $4 or higher for a loaf of bread. And that's just a loaf of bread. I'm talking about everything that you buy across the board. Milk, fruit, vegetables, meat, clothing, everything. Prices are going to go up. But is your income going to go up? No. Actually, income is lower now than it was 10 years ago. Incomes have decreased where the price of everything else is going up. I mean, can you see where this is heading? This is a scary downward spiral that we're starting to head into. People who are not aware of these things need to be aware of them.